Buying KASPA right now could be a once-in-a-lifetime opportunity for all of us, but why now and why can it be so life-changing? Well, for starters, I think the term life-changing means something different to everyone, right? So for me, life-changing means being able to have enough income acquired to be able to have the next 4 years of my life sorted, and rest assured I can spend all my time, which is more important, I believe, than money, and actual money into investing into, other projects that I might like, or investing my time and money into a business idea. But for some people, that might just be retiring. Definitely means something to everyone individually and everywhere in between. So that to me is life-changing. And why now? Well, essentially, KASPA is at the point in time where things are starting to ramp up. And so in today's video, we are going to go through some of the bullish features, what KASPA actually is, and then give you some metrics and obviously kind of like where I think overall it's actually going. So again, let's jump straight into the chart, guys. So why is buying KASPA a potential lifetime opportunity, and why now? Again, guys, we're going to go over that today. I'm going to break it down for you in a very comprehensive manner. But first, I want to let you know, I want you to steal the spreadsheet. Please go to the download link in the description and actually get it for free while it lasts. I'm going to get rid of this in 1 month and add it to my archive where I'm kind of putting together some of the best projects to get it a whole package for you guys. But it's only going to be free for 1 month. So please go down there, look through it yourself. It's definitely going to help you obviously visualize a lot of this sort of stuff as well, okay? So let's jump straight into it and get into the review. So KASPA is in a very unique position that has great upside, in my opinion, right? So the explosive potential is definitely here, and we're going to actually find out why it's still present even after, get this, it's 100x over the last 12 months. Yes, 10,000% gain in 12 months. Just insane. So of course, that naturally is a bit of a standoff thing, right? Oh, it's already pumped so much, I don't want to get into it. We're going to look into that a little bit more. So let's break KASPA down and see why now is or isn't a good time to buy, and if not, when. The bullish features that make me super excited in this project's future, and the concerns I also have with the project to ensure you are as aware as you possibly can be, especially if you decide to invest. One thing I find a lot of influencers don't like to do is criticize the projects they review because the community might have severe backlash, which is understandable. Or as an influencer, you don't really understand the project on a level to be able to criticize it because it's a clean, polished product. Sometimes you feel like you're not smart enough or good enough to do that, which is a detrimental thing, of course, but not me, right? Because the way I see it is you guys are putting your hard-earned money into projects, and you're looking at my channel for at least, subjective reviews, of course. None of this is entirely objective as much as I try to be. And so I want to provide as much value. Like this brilliant man, the best investor in the world, once said, I never invest in anything I don't understand. And so we need to poke as many holes in every single damn project we come across. And that is why you can rely on me to do that for you. Now, what is KASPA? Okay, so this is going to be a very brief overview. Again, I've recorded this video a fair few times, and I get too deep into this because it gets too exciting, so I'm just going to keep it nice and high level for you. So it's not a blockchain, it is a type of DAG. Technically speaking, it's called a ghost DAG protocol. It's just a variation of a DAG, and it creates what are called block DAGs, right? So just like blocks in a DAG format, right? This pretty much looks exactly like this. If you go to the KASPA website itself, you will see there's a diagram, a live updated diagram of how it's kind of like forming, and it looks the exact same as that. So the interesting thing about KASPA is it's not just a DAG, right? It's also proof of work DAG, which is pretty cool. We've never seen that before, I don't think, right? I might be wrong on that, but definitely nothing is more prominent as KASPA in this situation. So it combines a DAG structure, which is super fast. Okay, it can process heaps of transactions with a slower version of a consensus algorithm, which is proof of work, right? So obviously the cons in this case is, as we should all know, slow transaction speed, higher fees, high energy usage, which is a big issue, right? And also you need expensive equipment to run it. So you combine like this amazing fast properties of the DAG with the cons of proof of work, and it kind of like balances it out, right? It definitely like overcomes that to a degree, whilst having the same pros as you would in a proof of work consensus, right? So it's strong security, it's a good decentralization way of validation. I'm going to challenge that in a second, right? Strong competition, so on and so forth. So again, it's kind of solving the cons with the fast TPS. So KASPA works off block speed. We're going to get into what that means in just a second. And right now, its theoretic TPS is 400. Now, it's not quite doing that right now, okay, because it doesn't really need to actually do that. But the amazing thing is, kind of like the way it kind of works, right, is you can have these blocks, right, and there's DAG structure up here. And it pretty much is creating like one block per second. Sometimes it'll create multiple blocks. Sometimes, you know, it'll just, and then it kind of like goes like this. So they all kind of, it forms like this. The blocks are added and the transactions come into the network like this, right? But they work off blocks per second. So there's always going to be one block entering the network per second at least. And the way the network will increase its TPS is by actually going up to a maximum, as far as I've read, of 100 blocks per second. So you can imagine this just blown up and then having like 100 blocks at any 1 second being created at one time and having transactions added into those. So yeah, you can imagine like that's just gonna go astronomical. So we're talking like 40,000 plus TPS, again, for a proof of work layer 1 network, which is pretty impressive. Now, the finality in this case is 1 second. So every block, every time your transactions added to the network, you can be fairly confident it's final, but true finality comes in 10 seconds. It's apparently energy efficient. We're going to challenge this with one of my cons in a second with this algorithm it uses right here. Essentially, they're saying we're more energy efficient essentially because we're using the DAG system, which doesn't like get rid of blocks once they're on the network. Transactions added, it's added. It's not like proof of work on a blockchain where it kind of gets rid of blocks every now and again, and that's wasted, you know, computation. So technically it is greener than like Bitcoin, for example, or the old version of Ethereum. Also, it prunes itself. So every 3 days, which means the nodes essentially only have to store data from the entire network for the last 3 days, which is pretty awesome, right? Unlike Bitcoin, that stores a whole ledger, and most blockchains are like this, and it's just going to grow and grow and grow. And right now, Bitcoin size is about 494 gigabytes in size. So actually that's bad for decentralization because that prevents people with less, you know, expensive equipment to want to be able to download all that ledger and then continue to store it. It's just expensive to do so, right? Also, KASPA is looking again to become a true layer 1 by adding an application layer, which means it will support smart contracts, which is really awesome, especially for a proof of work DAG. That's very unique. And KASPA was actually designed in the footsteps of Bitcoin by enabling a truly open source, decentralized, fair, and democratized governance protocol, except doing one thing better, right? So it's going to obviously be able to scale with demand and also include dApps. So again, it's like Nakamoto's vision, but on steroids. We'll get into some use cases in 1 minute. But the underlying issue I actually have is that, like, why do we actually need it, right? I'm going to come back to some of these concerns in a moment, but I want you all to think about this as we're going through today's video. The question we all need to ask ourselves for every single damn project we look at is why. The why is so underrated, okay? And we're going to obviously answer this later on. But for now, let's have a look at the fundamentals. So guys, let me know if you like this layout, if you liked me analyzing projects in this format, okay? I want to know down below. So just be very brief, right? So of course, the meme in of itself, what is the meme of KASPA? Why is it so interesting? And ultimately, how did it 100x in 12 months? Well, it's because it's a highly scalable and fast layer 1 proof of work DAG with an application layer. We just don't have those, right? They're not as common as blockchains, proof of stake this, proof of stake that. It's totally novel. It's awesome, okay? And that's what drags people into it. It's also in a pretty powerful narratives as well, right? So layer 1, proof of work to a degree, highly scalable DAG, and unique. Now, I've said to a degree for proof of work because it is a proof of work algorithm, but that's not always a narrative to look out for, okay? It's just like awesome when you like pack everything in together. So what's some of the more basic stuff we could all look at on CoinMarketCap? Well, the current market cap right now is about 500 million and the trading volume is actually about 12 million, which is a 1:41 ratio. So you have the $500 million over about the 12 million trading volume, and it's about 1:41, which isn't the best, but I must say, for a network that doesn't actually have an application layer, there's no smart contracts, there's no ecosystem using the token, that's actually pretty good, I must say. And the other thing we like to look at here is the circulating supply, right? Just as a very brief thing, we'll look into this more later on. And as you can see, we have about 70% in circulation, which is pretty good. There's a max supply, so there'll only ever be 28.7 million tokens ever created. And again, we're about, 30% of the way to that point in time. But the good thing is it's proof of work, it's fair mined, which means that's all emissions. That's all going to come out gradually over time. Now, I want to point one thing out because this is a pet peeve of mine. People always talk about diluted market cap, and I'm going to challenge everyone that says that's actually an important thing to look at. It's not. All the diluted market cap pretty much tells us is, hey, if all the tokens, if these 28.7 billion tokens were in circulation, that this would be the market cap right now at the current price. Why do we have to know that? We don't have to know that at all. Yeah, we might want to look at kind of the dilution of the token price if all of these were in circulation, but we don't need to know market cap crap. It's just irrelevant, right? Again, dilution of the price is important. We don't need this market cap stuff. That's just a little bit of alpha, I guess you could say, for you guys out there. And the next thing is, again, the chart. So this is the last 12 months, right? And back here, it was at pretty much almost on the dot. Again, 100x difference from where we are right now. So what? $0.00024. Now we're at 0.000. Oh, I've just repeated that. $0.025 rather, okay? So it's 100x. Pretty insane, right? So we're going to come back to whether it's a good time to buy in a moment, right? But also, let's check where we should buy it, because it's very important we don't buy on a crap exchange, just point and blank. So the interesting thing about KASPA is, again, because it's a proof of work network in its true form, right? It's fair mined. Now, fair mine means that there was no pre-mining of tokens. They didn't give a set amount of tokens out to investors. When it launched at 0 tokens, and it just has gone up ever since the miners have been creating tokens and doing these blocks per second, right? Mining blocks, essentially. And the interesting thing is, it's got a strong community, right? KASPA's community itself raised $50,000 to have it listed on MEXC to cover the listing fee itself. So again, it's a good community. It is a downside to be a fair launch project in this case, because there's no development fund to help create it. But again, I'll definitely take it because it's as fair as you possibly can be in crypto. If you're looking to get on an exchange, I would definitely say, again, not financial advice, be careful with this sort of stuff. KuCoin, BitGet, and MEXC. Now, MEXC are actually a sponsor of the channel. So guys, if you did want to go ahead and purchase an MEXC and make an account, use the link down below. It would really help the channel out. So once that's all taken care of, and that to me is, the stats are fine, we're going to look into the tokenomics here. What's the actual token used for, and some of them deeper information in regards to what's going on behind the economics of the project, right? So the token, of course, is KASP. Again, to reiterate, the max supply is 28.7 billion tokens, which is fine. That doesn't really mean too much. It's just good for a project that's going to be used quite a lot. They do have to have quite a lot of tokens. The deflationary status itself, okay, so there's no deflationary mechanism, but yes, by technicality, because in a project where there's a scarce supply, technically there is deflation naturally, right? You're going to have people that might hold tokens, die, or never want to sell, so on and so forth. So by technicality, they're removed from circulation forever. Now, launch status, again, fair launch in November of 2021, no pre-mine. Again, it all just started at 0, and it's all been mined into circulation over time. Utility right now is store of value, you could say. A lot of people have thrown that term around. I don't know exactly right now if it is a store of value, but that term is being used. Transaction fees right now are very, very small, 0.0001 KAS per transaction on average, which is like that crazy low amount of dollars, right? Also, the rewards for miners, of course, when you mine blocks, when you help support the network, you get reward in KASPA, like any proof of work or proof of stake network. Now, here's the interesting thing. Let's talk a little bit more about the rewards for miners. The network doesn't pay miners for the blocks they produce, like other proof of work networks, but pays out a certain number of KAS per second. And this is called BPS, or blocks per second, which is halved each year, but is reduced by 1/12 each month to make sure it's a smooth process, unlike Bitcoin's halving. So to put it in perspective, right, Bitcoin halves once every 4 years, okay? KASPA halves once every year, but instead of it being like this massive halving, we've gone from 500 to 250, 250 to 125, a massive jump. What they actually do is divide that into, every single month. So every single month, proportionate to the entire year, it slowly divides, which I actually quite like, right? There's no like massive supply shock, which is really, really cool. And again, why? Because the block DAG structure itself, KASPA has to actually produce around 1 block every second. That's just like what happens, right? Blocks are formed every single second. And eventually they plan to scale that to 100, right? So instead of 1 block happening every second, there's going to be 100 blocks added every second, or at least has the ability to make that happen if demand does need it. So if they paid the miners per block, the reward system would be insanely bad, because a block is always produced every second anyway, right? So as the network scales, the number of blocks it can produce per second, the rewards is divided equally into the number of blocks produced in that round. So if the reward for KASPA was 100 KAS per block reward, right? And you have 100 blocks per second being created, it comes out to be 1 KAS per block, right? So instead of giving out 100 KASPA, let's just say it was 5 blocks per second. Instead of giving each of these guys, 100 each, it's gripped into 1 second. So that's 1 second interval. So then you divide the 100 KAS into equal amounts. So they will get like, 25 KASPA each, if that makes sense. It's a much better system in my opinion, and just makes total sense, right? So here's the vesting and emission sheet from KASPA. Now they don't have a distribution because again, it was a fair mine project. So fairly simple in that case. So this curve right here was actually designed for a reason, right? So lots of tokens come into circulation straight away, and that was to have most of the tokens in circulation before ASIC miners could get their hands on the network, which was a smart move, right? So ASIC miners are very, very powerful. Ultimately, that straight away leads to centralization because just like in Bitcoin, these are like $20,000 machines each, and they're very powerful, strictly used for mining, and they obviously are a lot more powerful than computers or GPUs. And that way, you know, obviously over time, it'll centralize all the rewards into different pools. And so by doing this, KASPA's mentality was, if we just give all of this out straight away, a lot of people that enter probably anywhere between like the start and like here don't need to get these ASIC miners. And when the miners start to come on board, like from here to here, well, hey, they're not going to be getting much anyway. That's kind of their mentality, right? And this expands out to about 2037, where the block reward is quite negligible. And at that point, obviously, as we know with proof of work networks, it'll pretty much all be transaction fees as the profit, okay? Hopefully that has made a little bit of sense for you guys. Let's now move into the metrics in this case. So keep in mind, KASPA is quite new and therefore not really established very yet, and it doesn't even have an application layer. So application layer pretty much means it doesn't have smart contracts. There's no actual ecosystem on the project just yet. And while we shouldn't presume, it is always safe to say that these numbers will increase, especially for a promising project. So the TPS average here is ranging between 1 to 8 TPS per second. The current nodes are 174, and as far as I could find, again, I could be wrong here, but I think that it's a private permissionless network. They say it's a public network nodes, which is fine, it's run by the community, but you have to actually be accepted on as a node from KASPA. Again, it's private permissionless, so anyone can do it, but you have to have access from KASPA to do so. And really good distribution here. Top 100 holders, 36%. That's what you like to see and what you would expect from such a network. Now, active addresses, I was very surprised. On average, the last 30 days, it's 23,000 people per day. That is insanely good, right? I must admit. Transaction count is about 103,000 transactions per day. Again, quite impressive for a network that is proof of work and actually doesn't have an actual use case just yet, right? So let's now jump into the last part of this video. Again, I apologize for rushing through this so quickly. The future use cases. So in my opinion, there's not much really happening right here, guys, right? So used for a true peer-to-peer electronic cash system, unlike Bitcoin, which is now essentially digital gold. So what I'm saying here is a big use case for KASPA, people have been saying, is that it's going to be used as a true peer-to-peer, no centralization, electronic cash system. So just for cash, right? Because Bitcoin, that was its white paper, and Bitcoin has since moved away from that because of all the upgrades the developers have done to it, therefore changing it to more of like a store of value at the moment, right? So it has the potential to become this peer-to-peer cash system, right? Used for enterprise services that requires fast-paced transactions and low finality, and smart contract compatible environment that is used because people want to work on proof of work, and not proof of stake. This is a bit of a stretch, I must admit. So I don't really think that's going to ever happen, but I wanted to add it in there just in case. And that's about all I can honestly see KASPA being used for in the near future. Remember, they don't actually have the application layer active yet. So as far as like the direction for the network, we don't really know. They don't even probably know themselves, right? They have to actually see how this progresses in real time. Now, where does it sit within the layer 1 ecosystem? This is very important. This is one of my 4 concerns. So we have HBAR, right? HBAR fits into this like enterprise IoT ecosystem, right? Because it definitely is really well built for that. And they, have a fantastic governing council. We have XDC focusing heavily on TradeFi and enterprise use. We have ETH as a settlement layer now and primarily used as a settlement layer for the layer 2s. We have Solana used primarily in Web3 and also IoT, very fast-paced transactions in Web3 itself. What's KASPA actually used for, right? So the important thing is that, this can come in time like we've seen with Near Protocol. They kind of recently changed their whole MO. However, it's something that has to happen fast. It's a very competitive environment, and ultimately KASPA is fighting an uphill battle because these guys are getting more stronger every single day, creating more connections. And once they connect with Web 2 services, Web 3 services, they have to work, KASPA speaking, has to work even harder to get those people back in using their network. It's not just like you don't have a business model being jumped around to different networks all day, every day. They have to really prove themselves to be different, right? So also I have a big problem with incentives right now. So why would a developer want to actually build on KASPA? I want you guys to ask yourselves that. Why? Why would an enterprise as well want to choose, KASPA to work with? If there is no development fund or grants, that's going to be a big problem. Again, there's no development fund. It was all Fairmine. It's just a nice open source network like Bitcoin. So who's going to fund developers to want to come and build? Sometimes developers need that incentive. Hey, we're going to give you $1 million to build your application on our network. So the take is also you, and therefore they aren't going to want to build on it. This is developers speaking here. since it's not true, tried, and tested, especially over other proven application layers. It's a big issue I have right now. Of course, these things can clear up in the future. Also, this is a really big one people just don't really understand and people just disregard, right? ESG narrative might scare away developers or enterprises. Just look at how Ethereum migrated to proof of stake, okay? Why would an enterprise, like a large business, choose to work with a project that was part of the reason crypto has a bad rap in the Web 2 world? ESG, environmental, use it, proof of work. Right now, it might be somewhat energy efficient to a degree, or more energy efficient than like Bitcoin, but trust me, when KASPA begins to get these ASIC miners involved, businesses are going to be like, hell no, because when they go to pitch their own business and say, hey, we're built on this like energy sucking, infrastructure, that's a big turnoff for a lot of investors. It's just facts. And also centralization. I want you guys to remember this. This one's a really important educational message. So yeah, why is centralization a bad thing for a proof of work network? Well, it sounds crazy because we're all fed the lie that proof of work is better than proof of stake because it's not centralized. Well, the truth is, only if the algorithm is ASIC resistant. Otherwise, those mining pools grow and grow until they pretty much control most of the security, which is actually a lot worse, right? Just look at the so-called decentralization of Bitcoin. These two mining pools, Foundry and Ant Pool, right, run by the guys who create the Ant miners themselves, or the ASIC miners, is 51.6% of the network, which means they control 0.6% more of the network required to take it down. They can double spend. If they came together and said, hey, let's double spend, let's give ourselves like 100 million Bitcoin each, or like double spend a transaction, they can do that. They have that control, right? So people say Bitcoin has 10,000, 20,000 nodes. Nodes don't matter if the actual security mechanism is compromised, right? This is what I've been trying to tell people. Decentralization has multiple different levels. It's not just node count by geographical location, it's security and it's other things as well, right? So let's now circle back before my opinion to why this could be once in a lifetime. Now, I've kind of given you a lot of a lot of negatives to KASPA, but don't get me wrong, there's a lot of positives as well. The network is a very big meme. That's why it went up 100x. That's why its competition like Kadena went up such, massive multiples as well in a short period of time, because it's amazing. People go, this is cool, this is unique. And that sometimes is enough to make these projects from this point, 500 mil market cap, do a 10 or a 20x from here. So I think this might be a really good time to buy if KASPA gets their stuff in order. They have a really good founder as well, by the way, one of the top guys in the entire space leading the project. So he can, if anyone can make this happen, make the protocol definitely change over time, evolve. This video isn't going to like stand the test of time forever. So I think if you can pick it up between, 2 cents to 1.3 cents, that's actually good to purchase because we might not ever see these levels again. And again, remember, it only has mining. There's not going to be sudden increase in supply or dilution. So we're not going to one day wake up and like 1 billion tokens are entered, it's going to drop the price. Okay. It's coming out over time gradually. So again, if I was someone looking to buy, not financial advice, those would be the two levels I would begin dollar cost averaging, right? So now let's finish up with my opinion. Now, I think KASPA sounds cool. I like the idea, and the market proved it did do well with the huge 100x reaction, just like it did in similar ways to KASPA's biggest rival, which again is Kadena, another scalable proof of work network, but obviously they're a blockchain. However, in my humble opinion, there is no need for the network right now, at least not that anyone can think of. This is concerning, seeing as the competition is fierce, and the longer KASPA waits to launch the application layer, those smart contracts, and actually starts competing, the worse it becomes. It's as simple as that. Time is of the essence. Now, we've seen the 100x, which came directly from the meme or just the cool idea of the project, but now it's time for KASPA to start pushing extremely hard into the utility department. What is it actually going to be used for? Now, this may be difficult since it has no development funds, so it can't incentivize developers by money. Only a kick-ass infrastructure like, hey, we're WebAssembly compatible, or we're EVM compatible, or we just make it super easy for you, no code, to create your applications, right? Which is much harder to do with the ESG narrative moving in and the bar being so high for this already. So again, you're going to have developers that just don't want to build on it because it, is harming the environment, and also because the bar for this amazing tooling is already so high. They have to really wow the crowd to make that happen. Now, a prime example is KASPA Network. This is KASPA with a senior. It's got a great kick-ass idea, super awesome features, and the application layer is live, right? But there is no ecosystem. It's one thing to create the protocol, get this, but another to establish the ecosystem. You can have this kick-ass amazing protocol, but you have to actually have something built upon it. Now, I am also really concerned that the mining algorithm itself isn't actually ASIC resistant, which will centralize the security over time. Another issue I also have is the idea of it being proof of work. Now, obviously, while this instills Nakamoto's idea of a leaderless economy / protocol, it doesn't align with many narratives that dApps and enterprises are looking for. Again, we circle back to the ESG problem here. But guys, all in all, I think KASPA is an okay play only because the price will still appreciate from the cool idea or meme. Again, it's like that massive draw-in factor with the big crowds, but I personally will not be investing just yet. Now, for me personally, KASPA is on my watch list, but it's just a wait and see situation right now. Again, just like Near Protocol, things can definitely change over time. Of course, I'm not going to ever pin a project and say, hey, this is the be all and end all, but of course, I've got to take the information right now and go with what we have. And what we have right now isn't a good enough reason for me to want to buy. Now, again, I think the draw-in factor is enough to bring in those large crowds because most people aren't going to go into this level of detail and information, so they might still buy in. So that is actually a very important factor to consider, and is why I haven't straight out said, KASPA is off my radar completely. All right, guys, take good care. Hopefully you have enjoyed the No BS review. And if you have, hit like, subscribe for more daily content, and I will talk to you very, very soon. Take care all. Bye.